Is rental cash damming legal? Short answer, yes, but there's a reason why your accountant has probably never told you about it. Stick around because this could be worth thousands of dollars of money back into your own pocket. Hello everyone, my name is Sylvia Ho and I'm a financial landlord consultant. I work solely with landlords to help you save money, decrease the taxes that you pay the government, and decrease the interest that you pay the banks. If you like the weekly training, please like, please love, please comment below or subscribe to my YouTube channel to encourage me to make more of these training videos. So why do most people not know about this life-changing strategy? Well, it's because CRA does not promote this strategy. CRA is not in the business of telling you how to pay less taxes. Rental cash damming is not illegal. It's not even a loophole. It's simply using the tax code as written. Historically, rental cash damming has only been used by wealthy Canadian landlords, but with high-paying advisors. But middle-class landlords are leaving real money on the table, but because no one has told you about it. So what is rental cash damming? Well, the foundational principle of rental cash damming comes straight from the Income Tax Act. And it says, if you borrow money to invest and there is a reasonable expectation of making money, you can deduct the interest costs on that loan. Let me repeat that again. If you borrow money to invest with a reasonable expectation to make money, you can deduct the interest costs on that loan. Here's the strategy in simple terms. You have a rental property with rental expenses. For example, mortgage payments, property taxes, condo fees, utilities, insurance. Instead of using your rental income to pay for the expenses, you borrow to pay for those expenses. So when your rental income comes in, you use that rental income and you pay down your personal home mortgage first. Your mortgage is on your primary home. And then you use your line of credit, you borrow from your line of credit to pay for all the rental expenses. And over time, you essentially convert non-deductible personal debt, which is your mortgage on your personal home, into a tax-deductible investment loan. The result? Well, you end up paying the same amount of money, but now a portion of the interest costs on that loan becomes tax-deductible. This is 100% CRA compliant, but you must structure it properly. That's a key thing, is you must structure your rental cash damming strategy properly. So let's just say you have $2,000 in rental expenses and you have a personal home mortgage. Instead of paying the expenses from your checking account, you're going to pay the rental expenses from the line of credit, while your rental income goes towards paying down your personal home mortgage. What that means is over a 12-month period, over 1 year, you will move $24,000 of debt from your personal home over onto the line of credit. And at a 40% marginal tax bracket, this could mean you would get back from CRA $2,000 to $4,000 every single year. And the beauty is it compounds. So essentially, the government's going to end up paying you to be a landlord. Like, how cool is that? Now, who does this work for? This works for any Canadian landlord. Anybody who owns a rental property, whether this is a standalone rental property or whether it's a basement unit or whether it's a triplex where you live in one unit and you rent out the other two. It is also for anybody, a Canadian, who owns a house here in Canada and personally lives in that house and they have a mortgage on that house or a line of credit on that house. This works great for individuals with higher marginal tax brackets. So if you feel that you're paying way too much in income taxes, this is definitely for you because now you can get back some of the hard-earned money that you are literally giving away working every single day. So the higher the income tax bracket, the more debt you carry, the bigger the opportunity. Is rental cash damming risky or is it complicated? Well, it's complicated if you don't do it properly. But when done correctly, And when done properly with proper documentation, proper structure, you will pass a CRA audit. I tell all of my clients, it's not if CRA will audit you, it's when CRA will audit you. And if you don't have separate accounts and you don't have a flow that is clear and auditable, you will not pass. CRA is all about looking at the paperwork and the paper trail. So this is why you need a knowledgeable advisor, not just anyone, to do rental cash damming. You need a knowledgeable advisor to walk you through the step-by-step process. As a financial landlord consultant, I offer a complimentary 45-minute appointment where we chat on Zoom and we go through your personal numbers. I will show you exactly how much you can save with rental cash damming. Typically, my clients, my landlord clients, shave off between 8 to 10 years off of their mortgage and save hundreds of thousands of dollars. Can you imagine being mortgage free 8 to 10 years earlier than your current amortization? What would you do with all that extra money? That money that you don't need to dedicate towards a mortgage payment anymore. So I invite you to comment appointment below. This is a no pressure, no obligation chat where I will give you clarity on how the strategy works, and I will show you how much money you can save up personally. So drop the word appointment below and I'll DM you and send you a link to book an appointment with me. Now, I only do a limited number of appointments this month. So please, the spots fill up quickly. So drop appointment below. If you have any questions, please comment below. I'd be happy to answer all your questions. My name is Sylvia. I'm a financial landlord consultant. I'm also known as the cash damming queen. I've been a landlord and a mortgage agent for over 25 years. I personally do rental cash damming, and I can tell you, I know it works. All right, my friends, talk to you later. Bye now.